First, President Trump said he hated it, it had to go, and that it was gone. And then he and Republicans went radio silent on carried interest, that so-called loophole, which is, people call it welfare for the wealthy, for billionaires. And it's a 20% tax bracket that they get to pay. As you know, we've been trying to untangle the complex web of how the private equity industry managed to keep that low rate for themselves in the Republican tax bill. And guess what? We started to untangle it yesterday. It's now getting more tangled. Charlie Gasparino, what is up?
More bizarre. I want to say that our story yesterday started a firestorm on Capitol Hill. We were retweeted. We were retweeted like 1,000 times. It basically boiled down this tax bill into something pretty understandable for average Americans. You, average American, you're going to get maybe $20 in your paycheck for this.
Or 30 or 35 per week.
Depends on where you are in that pay scale. If you're in a high-tax state, you're really going to get screwed, okay? If you're like in New York, New Jersey, and you're middle class, or California, you're going to get hammered because of the state and local tax deduction.
I believe Wisconsin is also on that list.
Listen, there's a lot more on that list than people. People think it's just all New York and California. You look at the tables. You're going to get screwed if you make some money in those states, okay? So you're getting screwed there. And so people are trying to figure out, how did this thing happen when Trump hated the fact that, yes, in the whole scheme of things, we need to get rid of loopholes, but we're going to give a really nice loophole to private equity. As we reported, this class of fat cats showered certain congressmen with tens of thousands of dollars in contributions leading up to the vote. Those congressmen are people like Paul Ryan, very powerful House Speaker, Kevin Brady of the House Ways and Means Committee, Orrin Hatch, Senate Finance Committee, Mitch McConnell, the grand master of this tax plan, the Senate Majority Leader. Also, Steve Schwartzman, the head of Blackstone, is a big advisor for Donald Trump. On top of that, now we're getting some word, I don't know if I believe this or not, that Steve Bannon may have played a role in this thing. Now, you would ask, why would Steve Bannon want to help out the fat cats? Remember, he's the populist guy, the rebel, the Breitbart guy.
Can't forget.
I actually like Steve Bannon a lot. He's personally a decent guy and a very smart man. But why would he want to do this? Well, what his associates are saying, which also point out, the White House is saying he played no role. But what his associates are saying is that he essentially wrote the language, the carried interest language that's in the current bill that says you can keep it if you keep it for, you can use it if you hold your investment for 3 years. Now, that's his quote unquote compromise to make sure carried interest was only allowed to be used for private equity firms and not hedge funds. We obviously came back and told some of Mr. Bannon's associates that hedge funds don't really use carried interest anyway, so it's sort of a non sequitur here. But, I mean, this is what's going on now. People are trying to untangle it. The Bannon people, I think the Bannon people, listen, Steve is a great guy. I know him personally. He got hurt when Roy Moore lost in Alabama. Remember how much he pushed for Roy Moore? I think right now the Bannonites are trying to keep him basically relevant to a certain extent. There's a story out in Vanity Fair right now that he might run for president in 2020. I mean, I haven't heard that one, but, it wasn't The Onion. It was Vanity Fair.
Well, don't tell Peter King that of New York.
Well, what do you call him? A disheveled...
disheveled drunk? Or,
Steve,
looked
just so
way.
You know, I like Peter King.
He
Steve really doesn't drink.
He could have been the populist hero had he really pushed to eliminate carried interest.
Yeah,
and if the word is that he tried and nobody would listen at the White House, he looks better.
He said that what they're saying is he tried with Congress and they wouldn't listen. And so he came up with this sort of compromise, which when you untangle it, it's not really a compromise. It's allowing the current system to exist because it really doesn't change it that much. You know what I'm saying? The bottom line is, if you're a private equity firm, you buy a company, right? You bring it private, you fix it up, restructure it, you lay people off a lot of times, you get rid of their health insurance, whatever, then you sell it later on, right? You usually take 3 years to do all that. That's 3 to 5 years. That's what happens. This bill says you still get carried interest. You see what I'm saying?
People who buy homes and fix them up and flip them 3 years later should be at 20%.
I agree.
But Charlie, I'm not sure people care. Trump supporters are thinking we'll get more in our paychecks, and they don't care. But if you inserted President Obama or some Democrat for Donald Trump and said, you know what? President Obama let carried interest live.
President Obama
people would flip out.
Gave Steve Schwartzman a 20% tax bracket, while you, average American, are getting you're going to get like $10 in your paycheck.
People would flip out.
They would flip out. I mean, listen, so
But
why?
because it's Donald Trump and they're believers in him, they are choosing to
ecstatic.
tweet us and say, would you let it go?
Yeah, here's the thing. We're going to call this fairly. You don't like what we say, that's your business. We're going to not back off of this thing. This is a real story. This is not fake news. And it's our job to hold both parties accountable.
Absolutely. I didn't hear Democrats screaming too loudly about it either.
By the way, how much did I beat up on Obama back in the day?
A lot. Charlie, thank you very much. Charlie Gasparino.